Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today would usually be Michael Becker, but Michael Becker is on assignment. And joining me today is Hans Box.
Hey, Paul. How are you?
I'm doing great. Hans is also with Old Capital. We're on a tour of Central Texas and kind of figuring out what the pulse is about what's going on in Waco, what's going on in Bastrop, what's going on in Austin, in San Antonio. We're trying to figure out what's good and what's happening and what we can learn from that. So today in the podcast, we have two gentlemen that recently purchased a property in the Waco area. So we're going to find out a little bit, we're going to get into the weeds on this one. We're going to kind of go into how they found the property, some of their challenges that they had in putting the transaction together, and we'll talk about a solution that Hans had come up with. So today in the podcast, we have James Greene and Brad Perry, and let's kick it off. Guys, thanks for coming into the podcast. We appreciate your time.
Thanks for having us. Really enjoy it.
Yeah, thanks for having us, Paul.
So let's talk a little bit about a property that you guys just recently acquired in Waco. But before we do that, let's have you guys kind of introduce yourself about what you guys do for a living and how did you guys come together?
Okay, well, this is James Greene. I am an engineer and I work in semiconductor research and development. I've been doing that for 30 years. And that's what I do in my day job, and I still do that.
Great. How about yourself, Brad?
Yeah, very similar. James and I have been working together in similar roles at a couple different companies here in town for the last 10 years and have gotten to know each other that way.
Great, great. So how did you guys first get interested in real estate and in particular multifamily, and kind of what kicked you guys off? How did you get started?
I really got started when my son left for college. We have one child, and when he was gone, I had an empty nester syndrome and started contemplating, well, what's next in life? What am I going to do? And I started thinking about what would I do post-high tech? And I looked at a lot of options, and I ended up coming back to multifamily.
Great, great. How about yourself, Brad?
Yeah, for me, it was more about that similar part of my career. Wanted to diversify with real estate. I actually got into single family first. I have a background in construction a little bit with my family. And after owning 6 residential houses spread out all over Austin, I started to appreciate the value of multifamily and scaling. And Jim was telling me about his stories and some of the dealings that was going on, so I started getting in it that way.
Great. So did you guys jump in this on your own, or did you work with a group? How did you get started in commercial real estate together?
My first one was a colleague of mine told me about an apartment he was going to do. Told him I had figured out real estate was what I was going to do, but I didn't know how to go about it. And he said he figured out the same thing 2 years sooner, and he was doing it and asked if I would be in his next deal. And about 4 months later, he called me up with the first deal, and I joined that one as a passive investor.
Okay. Brad, I think you joined as passive as well in a few deals?
Yes, I joined passive as well. And James kind of greased the skids for me as far as getting into a good network and learning from a bunch of like-minded, I think, well-educated in the market multifamily people to learn from.
Sure. That always helps get around like-minded people and to learn from people that have done it before. Makes things a lot easier. So you guys were already in deals before you decided to go out on your own. How many deals have each of you invested in before you decided to go after a deal as a sponsor?
I was in 9 other apartments before I decided to do this one.
Okay, so you got a lot of experience.
Yeah.
I was in 8.
Okay, great. So you guys decided to team up and go after a multifamily deal yourself. How did you decide on Waco, and what made you decide to go after this particular opportunity? If you could just kind of give me a background of the deal and kind of from start to finish how you decided to move forward.
James and I set out a few goals in the beginning, and one was to try to stay within a few hour radius of where we live. We thought that was important. So obviously Dallas was a place we were looking, and Austin, but those have gotten to be pretty competitive markets. Prices have gotten kind of high.
Sure.
We see a lot of deals and hear of a lot of deals in these secondary or tertiary markets. So we've looked at a couple in Waco. Waco is, right in between Dallas and Austin. You can drive up the highway and see the growth. So that initially got us attracted there when we saw the deal. Do you want me to go into depth once we saw the deal, what happened?
Yeah, I'd like to. I think our audience would love to hear about a little bit more details about how you guys, especially since you're first timers in terms of leading a deal yourself, how you went about getting the deal under contract and that process, just high level.
So we were actually looking at another deal in Waco. We had won best and final on that, but there were some issues with an assumption situation. So we were in the area. This property came up. It was a few miles away. We went and looked at it. It was very clean. As we got further into it, we found out that the current seller had, or current owner, had put like $600,000 of rehab in it in the last few years, and that showed. It had good street appeal, very clean. We found out that the owner was really a bigger player in the multifamily, and this was something they were kind of forced to buy as part of a portfolio of another property they really wanted.
Okay.
So they really, you could tell, just kind of wanted to flip this thing and then kind of get it off their books.
Sure.
So we threw out an LOI, we threw out a price, we did our underwriting and threw out a price. There were 16 offers we heard from the broker. We got 4 or 5 got best and final.
Okay.
We were told we were second. We were the bridesmaid as a term, I think we learned. So we stayed at it with this broker and looked at a couple other properties in the area. And it turned out he called us out of the blue a couple weeks later and said the people that had won the deal originally were kind of flaking out on him, and that if we wanted it, the broker, really, really liked us. He told the seller, we seem like people that can get it done. And he told the seller, just go with us. So he said, if we wanted it right there on the phone, it's ours. Just tell him. So I think I called Jim right away, and we're like, okay, let's do this thing.
I think it was 7 o'clock on a Thursday, if we were leaving work.
Yeah, the call came out of the blue. We weren't expecting it.
Sure.
But we had been in touch with him. We were staying up with him,
Sure.
this broker, which I think helped.
Yeah, we were still in the hunt for a property. We were pretty committed to our goal of getting a property. So we were happy when they got back to us.
Great. So you got it under contract, and it sounds like this, from the way you described it, this deal was a part of a bigger portfolio and might have been ignored by the owner, or at least not paid close attention to as some of his more important or more expensive properties. So that created what I would assume is probably some sort of value add opportunity to this deal. So if you could speak to that a little bit. Did it need a lot of work? What was the occupancy? What did you see as the main, I guess, challenges, but those are also opportunities with these type deals?
Well, the first thing we noticed in our analysis was they seemed to have a lot of people working at the property. It's a small property, 78 units. It's not too big, but they had really a couple of leasing agents or managers and a couple of maintenance people. And we were pretty sure you could just do one of each. So right away, that was a huge lever to knock down the expenses.
Sure.
In other regard, it didn't really need a lot of rehab. The biggest job we had was it had aluminum wiring, and we got a contractor right away to give us a bid on what it would take to remediate that. And so we've got that bid, and they're working on the apartment now. So that should be wrapped up this month.
Sure, and why don't we stop real quick so the audience understands aluminum wiring is typically in older properties, and most lenders and insurers don't like aluminum wiring because it has a tendency to create fires. So what James is speaking of is going through a process to correct that aluminum wiring and basically make it more, quote, fireproof. I know that's not the scientific term, but that's basically what they do.
Right. Every plug in the or receptacle will be copper. So that pretty much gets rid of the risk.
Right. So that was an opportunity right there because some people just shy away from that completely.
Right. But other than that, the property was in really good shape. They had invested $650,000, and it was quite visible. And it also met one of our goals we had set at the beginning, is that we wanted more of a yield play versus a value play.
And how far was the property away from Baylor University, and did you have students on the property?
I think maybe it's 1 or 2, but not. The population there is more middle-aged adults living at the property. It's not really a student property. It's not student housing.
So this is what we would call a conventional property. It sounds like a kind of run-of-the-mill C+, B- type conventional property for the working class, blue-collar demographic.
Yes, that's right.
Sure.
And it's on a street with probably 4 or 5 complexes all right around it that fit that same characteristics, yeah.
Okay. All right. So it sounds like you guys got it under contract. There's a value-add play to it in terms of fixing some deferred maintenance, reducing expenses through payroll reductions and other methodologies, and probably raising the rent some as you fix it up and do some interior. Because I know you had some interior rehab slotted for that. How did you all go about putting together the deal to buy the deal? So this deal, to give our listeners an idea, is a 78-unit property. And what I'm looking for is kind of a quick description. Is it just you guys buying the deal, or do you have partners? How did you structure that?
So, we decided to do a syndication for that.
Okay.
We brought together a group of investors. Quite a few are friends, colleagues, longtime friends and colleagues of ours. So we raised money that way through other passive investors. And along those lines a little bit, we needed to raise around $1 million. When we put this deal out there initially to our friends and colleagues, we were within a day, we had about a $1.7 million worth of interest.
So you were oversubscribed.
Oversubscribed very quickly.
That's great, because it sounds like it's a pretty good deal.
Yeah, the hard part was they were all our friends. We didn't want to have to pick.
Sure. Understood. So you guys put together a syndication, and now you have a partnership and formed an LLC to buy the property. One question, that I would have to ask is, you guys live in the Round Rock, Austin general metropolitan area, correct?
Yep.
The property's in Waco. So how are you going to day-to-day manage this property and watch after this property and make sure it's meeting your projections for your investors?
Okay, there's two parts of that. Well, one is I can leave my driveway and be on the apartment site in less than an hour and a half on any day, and it's less for Brad. So any day we have to, we can be there. But we don't really go day to day. We have hired a professional third-party management company who manages the apartment day to day. And they manage thousands of units, and this is one more apartment complex in their portfolio.
Okay, great.
I really do recommend, or I think what's very super valuable in this case is to, especially for your first deal, get a professional property management company. It's possible to self-manage, but I self-managed residential houses, and so I can't imagine doing that initially. I would go with a third-party professional person that's done it a lot.
Yes,
I'm counting on them.
That's very important. And in fact, our lenders typically want to see that in first-time borrowers or borrowers that don't have a lot of multifamily experience leading deals. They want to have the support of an experienced management company to kind of stand behind that borrower and make sure that the day-to-day transactions are taken care of.
As long as you get it in your underwriting, it's part of the price when you purchase the place.
Exactly. It's part of the normal expenses of an apartment is a 3 to 3.5% management fee that's underwritten to any deal. So I guess that kind of brings us more to the capital side of this. So we know how you got your equity, but now let's talk about how you got your debt. So you guys, I think the first thing you did is you brought the deal to a Fannie Mae lender, if I'm correct. So tell me a little bit about that and kind of how that.
Okay, I'll start that, then I'll let Brad tell you about when I abandoned him. In our network, we know other investors too. And how we ended up at a agency lender was they told us to go with a certain DUS lender, and they said getting a loan is falling off a log. It's so easy. It will all just go perfectly smooth. You won't have any kind of hassles. And so the allure of that was too tempting to bypass it. So that's the path we went down. And it all started out really good with nice level of funding. They had a nice list of things we had to go do and documentation we had to provide. And we did all that. We did everything that was on the list. I guess after we'd paid our fees, we did everything that was on the list. And we were ready to go. And then things went sideways.
So let me make sure I understand this correctly. So you went direct to a Fannie Mae lender. You did not come to Old Capital first, but you went to a Fannie Mae lender. They promised you high leverage in the deal. They promised that they could close in the transaction. And it sounded great. You sent your application fee, which was a large number.
Yes.
And what happened?
Well, what happened there really was, as I've learned now, is not an uncommon experience. When an apartment goes under contract, everything gets a little bit unknown about the future for the current staff. And I believe what happened is they just weren't really paying attention anymore to the property, maybe worried more about their own futures because they didn't know what was going to happen. So we had a fall off in collections. We had some move-outs, and things happened while it was under contract. And we hit a threshold of move-outs that kicked us out of the sweet spot for the agency lending that was so good. And it put us into a much rougher patch where the terms weren't as good, the level of leverage wasn't as good, everything got worse. And that started kind of on a treadmill of, okay, what can we do to resolve this? And we had more and more hurdles were put in front of us that we had to overcome.
Great. So what it sounds like you're telling me is that the current or the seller basically dropped the ball in his operations and allowed the vacancy to build. And if I remember correctly, I remember seeing a trend downward in the income and the net operating income of the property, which is a big no-no when you're trying to get a loan. Lenders like to see income trending the other way. They want to see a trend up. And it sounds like to me it was trending down.
Yeah, it went down a lot, and it really hurt our cause.
Keep your foot on the gas is my answer to that. If you're a seller and you're trying to sell your property, do not take your foot off the gas.
So at some point, I guess you guys decided that you needed to call Old Capital because the Fannie Mae DUS or Direct Underwriting Services lender decided they couldn't get the deal done for you. Is that correct?
Yeah, I do have to confess about the one part when I left Brad is that in the middle of this, it started to go bad. I left on a European cruise and left Brad Perry by himself to shepherd things forward, and I still feel a tiny bit of guilt about that.
Yeah, and he had the nerve to post all the pictures on Facebook daily, which was starting to annoy me. But yeah. So it started. We realized that these loan proceeds that they were kept cutting down to was just not doable. The deal wouldn't work at that level of leverage that they were going to give us because of the collected rents. So we called Old Capital to help us out. Also, another thing that I realized with the agency lending is it's a bureaucracy of sorts, and the people you get involved with initially, I think, are going through their little checklist, but they're not the people making any decisions. So it takes a while for them to collect everything, and then that eats into your time to get to closing. And by the time they get it in front of people who actually are going to make some decisions. And there was another analysis that was going on, I think, at the time, some underwriting related to some flood situation. And I got on the phone with that person, and it turned out they didn't even work for this DUS. They were outsourced. So I started asking her some questions. Well, I don't know. You'll have to ask this DUS person we were with. And that sort of disconnected and then
Sure.
bureaucratic happening very late that all of a sudden we're finding out this isn't going to work. Then they needed a waiver. We got into this period where they needed a waiver. So they were going to have to go to Fannie directly to get this waiver. Well, that's a process. They have to wait for the response, and just really kept causing it to drag on. Now, because the performance dropped, we got the seller to keep extending when our second tranche of hard money,
Sure.
or earnest money, went hard.
Okay.
Like, look, you're the cause of this.
Did you
You're
get
the
a
one
price reduction at
we
all?
we got them $150,000 off, and we got them to continue to extend that deadline when our money went hard. And honestly, we actually went out of contract with them for 7 days, and that's about the time we were contacting Old Capital.
Yep, I remember that email. So you contacted us, and obviously our first goal is to understand the transaction, understand where you are. So we had that conversation. And then Paul and I racked our brains to figure out who's the best lender for this deal, considering the borrowers, who you guys are, your net worth, your experience, and then looking at the deal itself. It's been Waco. It has a little bit of hair on it because it's been trending down in income. There's some difficulties with the deal. So we look at all those factors, and then we come up with one bank or one credit union, or Paul likes to call it one horse to ride. And we picked a local credit union here in the Central Texas area. We have a close relationship with one of the underwriters there, and we brought the deal to him. And so just walk us through quickly at a high level kind of what that experience was like working with that credit union, and just kind of the process. What did we ask for from you guys, and was it an easy process? And just kind of give the listener an idea of what it was like to apply for a loan for a credit union.
It was just orders of magnitude smoother and less stressful. If only we knew in hindsight, I would have got a lot more sleep and a lot less stress dealing with the agency. It was nice talking to somebody who said, I'm on the loan committee. I'm going to be there in the room when this gets in front of them. And so all this conversation we're having with them, I know it's going straight to the committee. A lot less process involved, just much smoother.
Sure.
Quicker. I knew it was going to be quicker. I think when we got them the deal, they said they'd be able to make a decision in 7 or 10 days or something like that, if I remember right.
Right.
Which helped us at that time because of where we were relative to.
Correct. And, the only difference in this is that because of where the deal is, this would need to be a recourse loan, obviously. for our listeners, meaning that the deal, if it went south, the bank or the credit union would come after the guarantors on a loan, which are Brad and James, for the difference if they lost money in the deal. Now, obviously, Brad and James aren't going to let that happen, but that's kind of what happens in terms of deals like this that need lending and they have a little bit of hair on them and they're difficult deals. You have to go recourse first, and then you can refinance out into a Fannie or Freddie loan that is non-recourse.
And that was an important step for us to get across. Get mentally prepared for the changing from a non-recourse idea to recourse and seeing a path forward. But the important thing there is you got to stay focused on your goals. Sure. And don't amplify your fears bigger than they really are.
Sure.
And one thing I realized about the recourse, after we got through it, and kind of conservative by nature, but if something was to go bad, the banks don't want to take this thing from you and own it. They really are going to try to, I believe, I haven't been through it, and I never will, but I believe them when they say they don't want to own the apartment. They're going to, if things do start to go downhill, if you're just honest with them up front, be transparent, they are going to work with you to try to continue to operate this thing. And if we believe in the asset we're buying and the performance we can get out of it, then go for it. Let that be such a big hurdle.
Brad makes a very good point. These banks aren't in the business of owning real estate. They loan on a lot of it, but they're in the business of owning or operating it. And I've heard hundreds of times, and Paul's probably heard thousands of times through his experience about how they don't want to own it. And, it may, even though the loan papers may say recourse, they're willing to talk through issues and extend loans and work through issues with you, the borrower, as long as you communicate. So that's a really good point, Brad, that you must communicate with these banks from the very beginning when you're wanting to get the loan all the way through owning it and selling it. So,
yeah, I believe the agencies will never be your partner, but bankers could be.
That's a good point. Very good point. So we went through the process with the credit union, and as I recall, they were giving you guys high-level terms, 75% purchase price plus rehab. I think you guys are going to put about $200,000 in the deal. The deal itself is about $3.35 million. So they're going to give you a loan of around $2.7 million, about 75% of purchase price plus rehab. 25-year amortization, 5-year term, about 4.85% rate. So very good terms. Those are pretty standard terms for a credit union and a local bank for a deal of this size. So tell me what happened. And we got all the way through the underwriting and we got it to loan committee. And then what happened?
Well, we got shot down by the committee. There was one person on the committee who didn't want to invest in Waco.
What the hell? I thought this was going to be a happy story. So you get turned down. You get turned down by Fannie Mae. You get turned down by the credit union. Hans, when does the good part of the story show up?
Oh, it's coming. It's coming.
Oh, it's coming. So hang on, hold on. So again, let's kind of talk about. So we picked this horse, and we do a lot of business with this credit union. We have a lot of confidence in the credit union, and credit unions have credit committees, and credit committees have people on staff that are employees of credit committees, and they live, breathe, eat. They're like regular individuals. But we just happen to have one individual on the credit committee that did not like Waco. So they had grown up, been born and raised in that area, and somehow they just didn't like their own hometown and didn't like this area. So one person killed the deal. So we had to give that information to Brad and to James and let them say, hey, listen, we like the deal, and it's going to happen. And so, Brad, what did I tell you when I had to make that call and let you know that strike one, you guys weren't able to get the Fannie Mae loan, strike two with the credit union, and you're saying, am I going to have a problem here? And what did I tell you, Brad?
I don't remember exactly, but you told me we will get this deal done. And I think what stuck in my mind, Paul, with you was that you liked the deal. I think you genuinely told me you liked the deal. And you told me in the past some other deals we might have looked at you didn't like. So with your experience and you liked the deal, you're the one with all the contacts to these lenders, and you said you were going to make it happen, and I trusted you were going to do that. You said you were going to make this your top priority. You realized the crunch we were in and what happened with this first lender that we were set up with, and you were going to make it happen.
So like Paul Harvey and the rest of the story, Hans, what's the rest of the story?
So once we got the bad news from the credit union, and who actually liked the deal as well, so he was very upset. Our underwriter, our contact who works with the credit union at the credit union, very upset about it. First time it's ever happened to him. He loved the deal, but they couldn't do it. So that's when we gave the news to James and Brad, and then that's when Old Capital's value really kicks in because we have a wide breadth of contacts and close contacts with local banks and credit unions throughout Texas and in some cases the nation. So in that case, what I decided to do was to go to some local banks that I knew that might like this deal and kind of bring them a high-level idea of the deal and see if they liked it. And there was a certain bank just south of Austin, just north of San Antonio area, that one of my colleagues at Old Capital had recently used for a couple transactions, and he had recommended them. And that's the first guy I called, and guess what? That ended up being our horse. So this banker was basically the head of the commercial lending department at this smaller bank in northern San Antonio area. I gave him a high-level idea of the deal, and he basically jumped right on board, got all the information from Brad and James, and move forward from there. And I believe we were able to close with this bank in probably 3 weeks, 3 to 4 weeks, somewhere around there.
Felt like less.
It might be less. I might
I think it might be less than
conservative.
that.
Yeah,
We
I
were
was being
really
conservative.
coming up to some deadlines.
We were. We thought we weren't going to make it. And what's even more great about this bank is, if you recall, I told you the terms earlier from the credit union. Well, not only did we get it closed, but we got it closed with 5% more proceeds. We got 80% loan to cost, so 80% of purchase price plus rehab, and our rate actually went down. So we got the best of both worlds.
That was win-win for us.
And a longer term. So you guys actually have an option to go with a 15-month balloon loan, so you don't have a gun at your head in year 5. Now, granted, the rate adjusts in year 5, but most bank loans, most credit unions give you 5-year terms, 10-year terms, mostly 5-year terms. But the beauty of this loan is that you actually could go up to 15 years and you don't have a gun at your head to refinance or sell in case the market isn't in the right place when that loan comes due.
Yeah, given that we signed on a recourse loan for the first time, I really liked seeing those terms on the loan.
Sure. What were some other things that you had to do to kind of make sure that this bank would come through and close this deal? I think you guys might have had to deposit some money at the bank and open some accounts.
Yes, we both have to open individual accounts. We've done, and then we're also putting an account for our own escrow for taxes and insurance. They didn't require that. They're not holding it back, but we set it aside every month and we put it in their bank.
Sure.
I mean, the issue being their portfolio, you guys call this portfolio lender, right? Where they're going to lend the funds based on the deposits.
Correct.
So if
It's
we
a
can help
balance
deposits,
sheet.
we're helping ourselves.
That is correct.
And we also learned from them after the fact. We've met with this banker for lunch and whatnot. Good guy. And apparently there's some regulatory type things where you kind of need to have a relationship with them to get the lending. So all this kind of helps.
Definitely helps. Yes, a lot of the smaller banks and credit unions do sometimes require deposits or you to be some sort of a customer with the lending institution to get the loan. They're not usually requirements that are hard to meet, but they are requirements that they need in order to close a transaction.
Okay, and then another thing I want to bring up. Now, you know Old Capital, and you know who we are, and you knew who the DUS lender was to do the Fannie Mae, that they are a large national bank that has a Fannie Mae license. But the credit union and this bank, did you ever hear about these two companies before you'd even been under application with them?
No.
No. So maybe not, but you didn't know that they were going to be a lending source for one. And so I think that's what the value added of dealing with, I'm not saying Old Capital, but with any multifamily commercial lender, that you have sources. I'm not going to say that we're the Cheesecake Factory menu of lenders, but we do have a lot of great relationships with a lot of lenders in, just like Hans says, not only in the state of Texas, Central Texas, Austin, San Antonio, but we're all over in different parts of the country itself.
What do you recommend new borrowers prepare for, and what would the recommendations you give them when they're doing their first apartment deal where they're sponsors and leads? What are the main items you think they need to know going into their first deal?
Well, you got to think of right away your total net worth versus the size of the deal you're trying to get. You have to think about your liquidity both before and after closing, because it's very important to the lenders. You have to have solid documentation. What assets do you own? Where are they? Right?
Yes.
It has to be very explicit, and you have to have it at your fingertips and be ready to go. You can't be wasting time when you're under contract trying to provide proof that you have some amount of net worth. You can't be That's all administrative things that just waste time. You should do all that before.
Right.
Be ready to go.
And that's why we were able to close so quickly with our final lender, is because Brad and James could get us all the information very quickly in the format needed by that lender. There was no impediments to getting the deal closed. And that's key with these banks, is to communicate with them and get them the information they need ASAP so they can move forward with their process.
I think we tried to move every request forward either the same day or before the start of the next business day. We never wanted anything to wait on us. We always pushed it forward to other parties.
I think another thing that might have been important when it came down to talking to these regional local bankers, that you really got to know your deal, really know it. I mean, I felt Paul called me a couple times and said, okay, we got this lender. Can you talk in 30 minutes? I'm like, and I had to get on the phone and on the spot really explain the deal to this person that's going to give you a few $1 million. And so you really, really, really better know your deal inside and out.
Good point, because really what you're doing is you're talking to your biggest partner. That's who you're talking to. Your other partners are important too. They're your passive investors. Their money is just as important as every other dollar in the deal. But the bank is your biggest partner, and so when they ask a question, you need to be ready to answer it clearly and in detail so it satisfies them.
And obviously the lender broker. I mean, really in hindsight. So you go with the DUS and everything works perfectly and you think you're a genius and everything went smooth. But what if it doesn't? Then what? Do you have contacts? Who are you going to call if that doesn't go through? I mean, you're reminding me of some of my nightmares where the real estate broker said, well, call this lender of mine, friend of mine. And so I called him at another DUS and he's like, yeah, we can get you going with Freddie Mac, but we're going to need this and this and this. And I think James and I are like, what are we doing? Let's get Old Capital to do all this work for us. They got the contacts. And I think for your first deals, especially, I mean, you really got to get some experts in this area to help you out.
Yeah, I think for your first deal is that you have to have a team. There's too much to do too fast to do it all alone, because there's very tight deadlines to close these deals, and you have to perform. And that's very important to the sellers, the certainty of execution. So Old Capital provided certainty execution on raising the funds. We had a legal team that was experienced doing this. They provided certain execution there. So the only new guys in the deal were Jim and Brad. And
also the property manager, right? I mean, that's another key part,
that's
key partner. So we got the property manager decided, and he came and did a walkthrough like within a day or two after we got the LOI out, I think, even before we were under contract. And then within a few days after being under contract, he was in there doing physical due diligence. They've seen a lot more apartment complexes than we have to come in and help us assess that ASAP.
Yeah, there's huge value in getting the right team together.
How much money did you guys have at risk if this thing didn't go south?
Which time?
So we had some hard points there where it looked like the deal wasn't going to happen and we were just going to walk away. And so we put up $10,000 of hard money right away. But then the app fee to this DUS was around $20,000. So pretty early on, we had $30,000 at risk if we were going to walk away. And we thought really hard about that. And then we spent more money, and there was another phase there where we were almost going to have to walk away from the deal. And I think we were out $25,000 each. And then once we got a hold of you guys and we decided to go back in contract after we went out there for about a week, we put $60,000 more hard money. So at that point, we were $100,000 of money out of our pocket there that we were at risk of losing if we don't close this deal.
Hans, thank God you did a great job.
Thanks, Paul.
Yeah. Well, then when that federal credit union fell apart, we're like, oh my gosh, we're going to be out $100,000. I don't think the seller is going to bump it the time again on us. And so then we came through. You really came through.
We just picked a second horse. There's more than one horse sometimes.
Well, I remember at one time, I think Paul mentioned you had 4 or 5 lined up, ready to go, right? And you worked the top 1 or 2. The other ones are at the ready. So that was so when we had $100,000 at risk, it was very comforting to have pros on the team saying, we've got it under control. We have a primary and a backup to the backup, and we have layers of protection to move the deal forward. That was very comforting.
That is correct. We had conversations with the bank there in the Dallas area with a contact we have, and He actually pushed it through his first set of, they have a little bit of different process, but they kind of have a preliminary or pre-flight committee that they went through, and he had it through them ready for us just in case. So it's our relationship with guys like that, because we were upfront with him that he wasn't our first choice. And he was fine with that, and he was happy to get as far as he could go and be there ready just in case. And that's one of our advantages, is the relationships that we have with individuals that will go the extra mile for us, so we can go the mile for you guys. So what are you guys doing now? What are you planning to do next? Are you going to buy another one in the next month, or are you going to work on this one for a while?
We'll probably do in parallel. So we have our professional management in place. We got through the two most critical rehab things we wanted to do or underway, and we should wrap up by the end of this month. And then we have to give the management a little time. It takes a little time to fill up the vacancies, and we have to turn over apartments and do some upgrades. But that's going to be kind of on autopilot now. And so the next step for us is start looking for other properties.
Great. So anything else you guys want to add before we wrap up this podcast?
I was thinking of something as we were describing what would we recommend to new first-time buyers like ourselves. One term I kept hearing, and I think it played pretty true eventually, was stay in the deal. There were several times I was willing to give up $15,000 and just be done with it, just that this is going to be hopeless. But actually the seller broker who I dealt with directly, we didn't have a buyer broker on the real estate side, he wants to stay in the deal too.
All parties do.
Yeah, right. And I think he trusted us, which was good, that we were being very diligent and working hard. So maybe that helped. But we had some pretty heated conversations a few times. And just stay in the deal. Just stay in the deal. And now if you want to risk $100,000 to stay in the deal, I guess you got to make a call at some point. But I don't know. That kind of stuck with me. Stay in the deal. You're going to run into some hurdles, but you get a good team and build the relationships and just find out how to solve that problem in front of you and stay in the deal.
Yeah, and one key thing on that, they commented, the selling broker, we performed to everything we said we would do at every step of the way. Even to the moment when we broke out a contract. We had performed and done everything we said on schedule, I say with full integrity of every step we took. And when we walked away, we said, we really want to be in the deal still, but we've come to a place that we can't continue without some changes. And I think because of our consistent performance, even through some difficult times, they were able to stay in the deal too with us.
Yeah, even when we went out of contract, we were still in the deal. That was a play in itself. We weren't actually expecting to walk away. Sure. We knew we were going to go back in. We just had some terms to work out.
Well, at that point, I think you had established confidence with the seller and the seller's broker, and they knew you guys were performing on the contract and were communicating. And that's key in real estate, is communication. And I think that'll probably serve you guys well in the future. If this broker has another deal for sale, you might get the first call.
That's what we hope.
All right, James, Brad, thanks for being in the podcast today. We do appreciate you spending some time. If somebody wanted to get a hold of you guys just to kind of talk a little bit about maybe some future opportunities, what's the best way of getting a hold of you guys? Through an email, I would think?
I don't mind giving my email. Can we do it right now?
Brad, go ahead.
It's bradperrymf@gmail.com. So it's my name, multifamily, bradperrymf@gmail.com.
I think that's good enough. If someone wanted to get a hold of both you guys, let's have Brad be the gatekeeper. Well, I can't thank you enough, and thanks for getting into some of the granular ideas on how you guys were successful about buying the Waco transaction. We could not have been successful without having Hans part of the team. So thanks, Hans, for being part of the Old Capital team. Things to remember, on 21st of September, we're having the fight of the century, Fannie Mae versus Freddie Mac at the Grapevine Convention Center, 21st of September, fight of the century. If you do want to get more information concerning Old Capital and the Old Capital Multifamily 101 white paper, kind of our 10, 15, 20-page report on how to structure transactions in apartments or commercial transactions, send an email to info@oldcapitallending.com, info@oldcapitallending.com. If you do like what you hear in the podcast, please get back on to iTunes and give us a 5 rating. We do appreciate that. 5 rating for Old Capital Podcast on iTunes. James, Brad, and Hans, thanks for spending some time with us today. We appreciate it. Thanks.
Thanks for being our partner.
Thank you.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.